Thanks for joining us here for a view from the floor here at the New York Stock Exchange. I'm Michelle Yu, joined by Bill Cafero from Wealth Enhancement. He's the Senior Vice President, and it's great to see you, Bill. And here's the thing. May inflation data just came out. How are investors reacting to this news?
Well, obviously from yesterday, terribly, and no surprise. I mean, investors have been worried about inflation really since 2022. It's been a main issue. Not much has changed other than the rate of inflation has come down. Prices have not come down. Obviously, with oil where it is, it's going to continue to be an issue for the consumer, and how that weighs on investors is obvious. Worried about interest rates, what the Fed may or may not do. Remember, we came into this year thinking the Fed may actually cut rates. Now there's a growing camp of, are they actually going to increase rates because of where inflation is right now? New chairman, so there's a lot to chew on from an inflation perspective.
Despite all of this, though, markets don't seem to be too affected by this. They have been experiencing all-time highs recently. What should investors be looking at? What should they be doing right now?
Well, first of all, what they should not do is try and time markets. The worst thing to do is markets at all-time high, let me sell, let me go to cash. That's only the good case if you need the money within a relatively short period of time. But if you're in it for the long haul, do not try and time markets. You'll get burned. Some get lucky at doing it, but typically that does not work. So they just stay the course. And basically, at the end of the day, stocks reflect earnings. And yes, there's inflation, there's a war, there's high oil, there's a lot of geopolitical turmoil, political turmoil. But at the end of the day, if companies are making money, the stock price is going to reflect that.
Speaking of geopolitical turmoil, it seems that U.S. and Iran are not going to have a resolve anytime soon. How does this affect the market?
It's obviously going to affect it day to day from a volatility perspective as it pertains to the impact on oil, which obviously ties to inflation and ultimately what the Fed ultimately does. So clearly the stocks are going to be volatile based around that. That's where investors really need to kind of step away from that noise, understand and trust in their process. If they build a portfolio that makes sense from them from a liquidity perspective, both for the short, intermediate, and long term, just stick with that plan, be disciplined about it, but also take advantage of the fact that, hey, we're at all-time highs. If you have more equity risk than you intended at the beginning of the year or a year ago, it's not a terrible time to rebalance.
So what would you say is attractive right now out there?
I think from an attractive perspective is basically what's been working. I mean, you look at the companies, like I said, stocks reflect good earnings. Where are the earnings? It's still in the tech sector, right? There's other parts of the market that are starting to do well. Small cap stocks kind of came off the mat a bit. So I think investors appreciate valuation and bargains. Unfortunately, there's not many bargains in any capital markets at this particular point in time, so you have to pick your choices. But I think at the end of the day, if you build a diversified portfolio, it sounds boring. Diversification is boring when Nvidia is going up 1,000%, but diversification plays its part when you really need it the most.
We are approaching the second half of the year. What should investors be focused on? Is there something that they should really keep their eye on, or they're going to miss the boat on something?
I think at the end of the day, when you think about where we are with market highs, think about your overall financial plan. If you have charitable intent, why wait to the end of the year like most people do? Giving to charity of appreciated stock is a phenomenal wealth building tool. You get a double whammy in terms of basically not only avoid the capital gain, but you get the deduction from a charitable perspective. Go ahead and donate that stock today. Why wait until December? No reason to do it. If you're not sure what you want to do from a charitable standpoint, think about donor advised funds. So think about your taxes. You can't control markets, but you can control fees, and to a certain extent, you can control your taxes. That's where the value is added along the way.
Thank you so much for joining us with your knowledgeable insight.
Of course, my pleasure.
And that'll do it for us here at the New York Stock Exchange. I'm Michelle Yu. Thank you so much for watching, and we'll see you next time.